What's up, everyone? This is Dr. Tate from Quant. Welcome back to our beginner's guide to algorithmic trading, quant trading. In our last episode, we were into the world of simple moving averages, or SMAs, understanding how they smooth out price data and help identify trends. Today, we are taking a crucial step forward, implementing our first simple trading strategy, yes, based on SMA Crossover. This is where we move from just understanding an indicator to actually using it to generate hypothetical buy and sell signals. So we are looking for some signals right now. It's the core idea behind many trend following systems. The SMA crossover strategy will be explained shortly. So as we briefly touched upon, the SMA crossover strategy is one of the most fundamental and widely used technical analysis techniques. It involves using two simple moving averages, a shorter period and longer period. Fast SMA, slow SMA. We are going to use 20 days and 50 days. So buy signal, when the fast SMA crosses above the slow SMA, it's considered a bullish signal. This suggests that the recent short-term momentum is gaining strength relative to the longer trend, potentially indicating the start of the uptrend. Sell signal, conversely, when the fast SMA crosses below the slow SMA, it's considered a bearish signal. This suggests that short-term momentum is weakening, potentially signaling the start or continuation of a downtrend. So you gotta sell on death cross. You gotta buy on golden cross. So the logic here is that the faster moving average, being more sensitive to current price action, leads the slower moving average. So when it crosses over, it indicates a shift in the underlying trend. So let's jump straight into the Colab notebook to implement this. So I already wrote all the codes for you. So you remember the last episode, we draw this chart and closing price and SMA 20 days and 50 days. So we're going to design our crossover strategy. So import pandas, yfinance, yfinance, and matplotlib, and we will import another package called numpy, numerical Python. So this numpy package is the must with the pandas. So you got to remember this pandas and numpy. Those are just dual and they go along all together all the time, okay? So initialize signals column with 0. So apple underbar df signal column equals, we define as a 0.0. Apple df signal equal numpy, where the SMA is greater than SMA 20 is greater than 50, then it should show us like 1.0. If not, it's 0. So generate actual positions. So apple df position equals apple df signal dot diff. Okay, difference. So let's do some print, and you'll see all the datas with the close, high, low, open volume datas here. And at the end, SMA 20 days calculating and 50 days were calculated. And signals, you see the zeros and ones. Positions, zeros and ones. You calculate everything in the tabular type of data frame, and then we visualize this. So when to buy, when to sell, let's see. And there we go. As you see, the blue line is the actual price, and there seems lots of signals here. That's death cross, golden cross, that cross, golden, that golden, dead, and then another golden cross. You see the green triangle and red triangle. This is the Quant Man-Apple SMA crossover strategy signals. Now let's find out, what about the other stocks? Let's go to McDonald's. Just feel like McDonald's, okay? I'm gonna rerun all of the packages. Yahoo Finance. Here you see the ticker. I'm gonna put McDonald's, which is MCD. Everything stays same. McDonald's, you'll see the price of a McDonald's. Yeah, it's different. And 20 days and 50 days of McDonald's here. There we go. And what's gonna happen to our strategies? And visualize it. There we go. Wow, this is the trend. Buy, sell, buy, sell, buy, sell, buy, sell, sell, buy, sell, buy, sell, buy, sell, buy, sell, buy, sell, buy, and sell. Now it's going to give us another signal, right? The buy signal. It's coming. So we can keep this stock McDonald's as a basket or whatever. So is it cool? This code will be provided under the link below. Okay. So I think that is very enough for today. I hope you learned lots of things. But there is a limitation. While this looks great visually, a key limitation here is that we haven't quantified the performance. We don't know if this strategy actually works, it actually made money, how much, and how risky it was. This brings us to next crucial topic, backtesting. Yes, in our next episode, we will take these generator signals and perform a full backtest. So we will calculate basically the daily return, cumulative returns, and compare it against a simple buy and hold benchmark. Start thinking about important metric like drawdowns and risk. So I can give you a little homework. Why don't you make some changes on SMA periods? Instead of 20 days or 50 days, you can try much shorter, like 10 days, 30 days, 50 and 100. And how do the signals on the plot change? Are there more or fewer signals? Let's try this and try a different stock. As I showed you before, like McDonald's, you can do some Microsoft or any Google's, Tesla. Just pick one and apply the same logic. And then do you see any periods where this strategy might perform like a poorly? Yeah, it depends on the stocks and market situation. You gotta do your homeworks. So change SMAs, try different stocks, and reflect and to see like what's happening. Is this working? So this hands-on practice is very vital for you for building your own intuition. You are becoming a professional, okay? You've now learned a fundamental concept in algorithmic trading, quant trading, how to define a rule-based strategy and translate it into code to generate even signals. This is very basic, simple, but I think this is very powerful. And if you have any questions, feel free to leave them in the comments below. Don't forget to like this video, subscribe to the Vibe Quant channel, and hit the notification bell so you don't miss episode 5, the next one. This is Dr. Tay from Vibe Quant signing off. Peace.